For the consumer, this really means two things. The most immediate thing it means is that interest rates will most likely fall and stay low for a while, so that will help a little bit with things like refinancing and perhaps credit card interest rates and things of that nature. The problem is that what we've done here is we've moved debt essentially from the banking system onto the taxpayer. So over the long run, what we see is an increase in the federal deficit and therefore the debt of the government. So the taxpayers will have to pay that, at least through higher taxation in the future or perhaps reduced services in the future. So kind of what we have done is we've taken an immediate fix and spread that over the long run. And it may or may not work. That remains to be seen. I would argue this is not a good thing. What you see here, for example, we had two very polarized economists agree this morning. People like, well, even like Newt Gingrich and Paul Krugman at the New York Times agree that this is not a good deal for the American taxpayers. Now, the good news is that we didn't nationalize the banks. I think that's what we saw the reaction in the market to yesterday, along with good housing numbers. The bad news is that what we've really done is we've taken Paulson's plan out of the Bush administration, and instead of using strictly public funds, what we're doing is we're using public funds plus debt guarantees plus a little bit of private money to go out and buy these same toxic assets that we could not get earlier to go into the marketplace. I think for the citizens of Mississippi, there's good news on several fronts. Firstly, the economy here is doing better than in most states. So what we've seen is that most people in Mississippi, or certainly relatively speaking, have not lost their jobs, so they're able to meet their obligations that they generally have. Prices have come down on homes and land and loans and things like that. So for the people who are able to get a loan, who have good credit and have been watching their financial situation and taking care of the business they should be taking care of, this has been a very good event for them. It's the marginal person who has lost their job and who was in an industry that was weak or vulnerable, and then when the economic problems hit, that industry went out or that person lost their job, that is hurting the most right now. I would argue that the debt that they've taken on, most people will not feel that for a while. But if you lose your job because of this economic crisis, then you would feel that much more painfully and much more close to home than you might some big bank in New York or an insurance company getting a bailout from Wall Street, from the government. That's much less of a concern for you compared to your job.